we like to put the butterfly on early in the morning when volatility generally, for most mornings, it's inflated because no one knows what to expect going into the new day. And then as things settle out, right, maybe around 10:30, it drops and then goes into stasis, it gets really relaxed, and then premium explodes. So that's our general day. So this morning, volatility was high right at the open. And that's because we had a little gap down. And so it got elevated. But right after the open, it just dropped like a rock, just went straight down. So while it was dropping, people are trying to get in. They get into their price. And the price wasn't really moving a whole lot during this time. People will get into a trade and they don't get necessarily a great price because they got it as it was halfway down. And then they get in and it just keeps on dropping. Now you might think, well, that's pretty good, right, Ernie? No, here's the problem. We trade as something called the Batman strategy. And that is two butterflies on either side of the market. Now, when volatility is dropping, the effect that has is that premium starts rising on both of the flies. But between the flies, where you actually got in, it starts dipping. And so we're sitting right in the middle, losing money. And it's generally not that big of a deal because we understand that, look, if volatility is dropping like that, there's the tendency to price to move. And particularly if volatility is dropping fast, price should start moving up, right? Except for this morning, it didn't. It didn't until sometime around noontime when the market started to break out of this little funk it was in and started to move up. So it was kind of a delayed reaction to the volatility dropping. So that made the trade relatively difficult to handle because very early on we get in thinking that hey, everything's going to be cool. Volatility usually doesn't impact our P&L at all until around noontime, and then things start changing. Or if we have a sharp move in the market, it might affect the premium collection a little bit. But today was an unusual situation where volatility front ran the market. The market kind of paused while volatility had dropped, and that caused our premium to get depressed in the middle, but elevated on the ends inside the flies themselves, which is what you would expect to happen. And price didn't move. We are sitting there with a fair loss on the debit in between those flies. And it was very confusing at first. You know, you're wondering, well, what the hell's going on? This hardly ever happens. And particularly on the day that I chose to talk about volatility crush and what normally happens. So that's just the way trading goes, right? The thing that you expect to happen doesn't happen. When you don't expect it, it does. And what happens? You can't expect it. It's like really thinking that you know where the market's going to go, or you have some sort of market bias. You think that, but it never really pans out that way. It's pretty regular that we can expect implied volatility to be elevated in the morning and then slowly drop off over the day. There's only so much that volatility can affect the trade in the first part of the day. And then the rest of the day, there's only so much time left. Volatility is going to decay at whatever its normal rate. So if it gets ahead of itself, it kind of gets put on pause until that second half of the day happens. That second half of the day, or maybe the last third of the day, is kind of ordered. It's going to have the kind of premium decay it's going to have no matter what happened in the previous part of the day.